Hello everybody. Hope you're all having a great weekend. Let's take a look at Bitcoin because we're at a critical moment right now where the bulls need to hold this major support level. So right now we're in this ascending wedge basically right here. So we have a pretty valid pattern. We've got a lot of buy and sell orders in here. This is some pretty major support in this area. So we'll zoom in here, take a look. The stochastic RSI is on this 4-hour chart is in the oversold area down here. So if we expand this out a little bit, take a look down in here. So when it gets down in this level, this is oversold. When it gets up in here, this means it's overbought. So the market's really hot, needs to cool off. Market's really cold, it's ready to get hotter. So if that helps out. And then we're currently in this descending channel here in the MACD, and it's a pretty obvious one. So pretty substantial. So we're looking for an upturn here as well, and then combine that with a lot of support in this area here. Let's expand this a little more so you can get a better look here. So you've got a lot of support in this area. You can see that this candle body has wicked all the way down to the bottom of this major support, and it's come back up toward the top of this support range. And again, this is our broadening, or sorry, our ascending wedge right here. We're in a descending channel here. So we're hoping to get a bounce out of this area, then propel us up, break out of this descending channel, and then go and attack this area here. Retesting the previous all-time high. There's a lot of resistance here because anytime the currency, or a cryptocurrency, in this situation Bitcoin, when it prints a new all-time high, then a lot of people create sell orders, because what usually happens is that this all-time high is tested at least once, and a lot of times 2 or 3 times before it breaks above this previous all-time high and then creates a new all-time high. So if we break above this level and create a new all-time high, that's great. But we also have this upper trend line right here, which we would need to break out of. Now, this ascending wedge, at some point, the likelihood is that we would break lower. We would break out of this wedge. However, when Bitcoin, Bitcoin does this often, when Bitcoin is in this particular scenario, this ascending wedge, and it does break higher, it goes parabolic. So we are looking at targets of 68,000 and 70,000 up here. So if we get a bounce here and we break out, we're going to just blast through these targets, and we could be on our way, like many have been predicting, to a $100,000 Bitcoin by August. Now, that is not set in stone, but based on the trends, based on what Bitcoin does in history, it is a likely scenario that if we see a breakout out of this ascending wedge and we go through these targets, we could very well see a $100,000 Bitcoin in the coming months. So with that being said, let's go and take a look at our Bitcoin dominance. So Bitcoin dominance over the last year, We've had kind of a nice little ride here, but we have been declining, or Bitcoin has been declining in its market dominance quite a bit. And you would see that reflected in the altcoin prices. So this is why XRP has run up in price. This is why Dogecoin, one of the reasons why Dogecoin has run up in price. Of course, there are a lot of other factors, but people are taking their money out of Bitcoin and they're putting it into other altcoins. And if we drill into the last 5 days, we can see the steady decline in the market dominance of Bitcoin. If we look at the peaks here, we can kind of imagine that we're drawing a line. So we want to start from the front and go backwards. And if we draw an imaginary line, we may have seen a breakout right here, and then it's retesting the upper trend line. So we may actually see a surge in Bitcoin dominance very soon, which could correlate to what we got going on here, right here. So if Bitcoin over the next 24 hours or so continues to range in here and then breaks out of this pattern, we could see a surge in the Bitcoin dominance, which means that the alternate coins, Ethereum on down, will see a possible decrease in price, especially when you're comparing Bitcoin to those various altcoins. So again, like I mentioned before, there are trading pairs, and most of us think about cryptocurrencies compared to the US dollar because, of course, this is where we live, or even if we don't live in the United States, the US dollar is the world reserve currency. So a lot of times when we're comparing prices, we're thinking of the prices in US dollars. But Bitcoin can be paired with other currencies, especially other digital currencies. And if the Bitcoin price surges, then the price of Bitcoin is higher in percentage-wise to a particular currency, an altcoin like Ethereum. Versus when the overall market increases in value. So if we're looking at over $1 trillion in Bitcoin, and the overall market cap is 2-point-something trillion dollars right now. So if the overall market increases, the rising tide floats all boats. But you're going to have larger gains in the alternate coins when the Bitcoin dominance is down. And then looking at our fear and greed index, today we're at 79 out of 100. So last week we were I think we were at 74. We were a little further, to the left here. So the foot is on the gas a little heavier. And like I mentioned before, when this needle is down in this area, when we're in the 90s, then that is a time to really reflect on where your positions are in your various cryptocurrencies. And Bitcoin may very well have a decrease in price because a lot of the smart money is thinking about taking profits. And when they take profits in large amounts, and that creates fear in the market. I've talked about the herd, I've talked about the sheep, so to speak. And the herd tends to get fearful and they panic sell. So when you see this needle up here in the mid 80s to low 90s is really start to pay attention, in addition to all the other indicators that you have at your disposal when you're looking at charts. This is a really good tool to use. And then another good tool to use, which we'll talk about a little more further in the video, is the money supply. So anytime the Fed prints more money, the overall supply of US dollars increases. And I want you to take a look at this chart. This chart goes all the way back to 1959 here, And this is basically all of the money that is in circulation, all the US dollars that is in circulation. And circulating money supply is everything that's in our hands, everything that's in our bank accounts. It does not include the U.S. Treasury or the Federal Reserve banks or vaults of depository institutions, because that money is not in circulation. It's not being exchanged at grocery stores, at other retailers, online retailers. It is not being used. It's not being used for buying and selling. It's not in circulation. So anytime the Fed prints more money, that increases the money supply. Now, if you notice, there is a really sharp uptick in the supply. And if you look back here, this is in 2008. So we had a fairly steady rise in the supply of our money. But then in 2008, if many of you remember what happened in 2008, we had a little market crash. And what was one of the things that they did to overcome that market crash, so to speak? They started printing money more than they normally do. And there were stimulus bills, and there was, some of you, myself included, bought a new house in this time frame between 2008, 2009, 2010. There was a tax credit that was available to first-time home buyers in the sum of, I believe, $8,000. And it's a lot of money. So that money has to come from somewhere, and they borrow it from the future, and they print it in the now. So this money supply started increasing in price. And there's a direct correlation with the increase in the money supply and the increase in price of Bitcoin and the overall cryptocurrency market. So you can see right here, February of 2020, there was the beginnings of a huge increase in the money supply. And what was going on in the beginning of last year? We had this little health crisis that many of you are aware of around the globe. So a lot of money was printed, and if you've noticed over the last year, the price of cryptocurrencies have skyrocketed thousands of percent in value. So what does that tell you about the US dollar and the overall global financial system in comparison to cryptocurrencies? And we'll get into that next. So I want to start off with an article that was written quite a while ago. This was back in 1995, so November of 1995. And if you look at the title here, Central Banks, Gold, and the Decline of the Dollar. So back in 1995, someone took it upon themselves to write this intelligent article about the decline of the dollar in 1995. So we're going to take a look at a little bit of this. The first couple paragraphs here. So when I read this, just keep this in mind when we look at some other information further in the video. So inflation, currency depreciation, and business cycles, is it inevitable? Are they inevitable facts of life? So the question is that the way that we're living now, is this just the way it's going to be? Okay, are they part of the laws of nature? Or are they origins that stem from the actions of man? And when someone posts a question like this, my first reaction is, of course, it's the actions of man, because we are manipulating nature just by being on this planet. We do things to manipulate nature. If there are things that we have influence over, are they discoverable? is through the science of economics. And can economics teach us about the origins, and can it also teach us how to avoid them? So, particular in need, which all money, even fiat money, which we now use, serves is to facilitate exchange. Okay, so the whole purpose of having a coin in your pocket is so we can exchange that coin, that piece of value, for something, a product or service that has equal value to the currency that we're using. So, we accept money, even if it's not backed by a single grain of precious metal, because they know other people will accept it in exchange for goods and services. Okay? People accept the US dollar today in exchange for much less than we used to. So since 1933, the US dollar has lost 92% of its domestic purchasing power. 92% of its domestic purchasing power. That's a lot. Okay, even at its moderate 1994 inflation rate of 2.7%, the dollar will lose another half of its purchasing power by 2022. Okay, this was written in 1995. We are now in 2021. Remember that chart that I showed you a few minutes ago? In international markets, the dollar has, since 1969, depreciated 65% against the Deutschmark. So that's the German dollar. 74% against the Swiss franc. 76% against the yen, the Japanese yen. Many economists claim that this is the price for full employment. If so, I'd like to ask, and this is the guy who's writing the article, who among you thinks we've gotten our money's worth? Okay? So we've experienced 11 recessions. Again, this is written in 1995. Since the advent of inflation as the normal state of affairs in 1933, with the unemployment rate reaching 10.8% as recently as 1982, clearly the demise of the business cycle, a forecast made during every boom since the 1920s, is but a mirage. We have seen unemployment higher than this since this article was written. So, the EU is showing all the signs of a failing state. And this has been exposed by Brexit and their political response to Brexit. The EU is having major problems. So all these nations that are part of the European Union, if you remember during 2008 when we had this global financial crisis that was averted, not really, they just printed more money. There were people rioting, not just protesting, but rioting in France and in Greece and in Spain. People all over the world. We don't, unless you have traveled around the world, many of us don't really realize how good we have it here in the United States. And we are in a little protected bubble that is about to burst if we don't pay attention and if we don't do something about the state of affairs in our own country, which tends to regulate the global economy because, again, the US dollar is the world reserve currency. So there's a group of Republicans that have formed a new caucus, and they're calling it America First Caucus. And essentially, they have some tenets, and there's some key points of this, and they're saying that the strength of America's monetary position has been under attack for decades by Keynesian economics, economists and here in the United States, and by globalist institutions, looking to enhance China's position on the global stage. Now, why would they do that? Why would they try to enhance China's position on the global stage? Because there are billions of people that live in China. And the United States system is based on consumerism. We don't manufacture as much as we used to. We consume here, and we use credit to do so. And that is how our economy continues to run and grow, is by consuming things. So the globalists need more people to consume things. And there's a lot of people in China that can consume. But China's economy has to flourish, has to grow. The average income has to increase in China for the people of China to buy more stuff. So they go on and they say we must protect the rights of Americans to best position themselves for a changing economy by promoting the development of cryptocurrency companies domestically, and defend the rights of Americans to hold private stores of wealth, including gold, silver, and other blockchain-based currencies like Bitcoin. So there are people in our own U.S. government. There have been a few here and there in the various states that have been paying attention, but we have people in our federal government that are really paying attention. They are beginning to understand what is going on. Many of them realize that they have created this problem, or they've perpetuated the problem. So, we have a lot of politicians that have been in office for decades, 40, 50, 60 years. So they have been, those who have been in the longest, have been a part of this problem. The gold standard, we started to move away from the gold standard after the Great Depression. And it didn't happen overnight. We didn't decide as a nation, okay, we're no longer back our US dollar by gold. It happened gradually. And the final nail in the coffin was in the early 70s by Nixon. It was in 72, 73, right around there. Where the last piece of legislation was created and signed into law that completely removed us off of the gold standard. And since then, it has all been inflation, baby. It has all been oil-based, basically. So the U.S. dollar is not necessarily backed by oil. The U.S. dollar is a world reserve currency because the U.S. dollar is required to buy and sell oil. And this is one of the reasons why oil always seems to come up as a topic when we go to war overseas. And if you look at history and you look at war in history, wars tend to be fought over resources. And one of the major resources on this planet is oil and oil products. And the United States is very strong because our U.S. dollar is required to buy and sell oil on the global market. So U.S. inflation expected in the March CPI report, and crypto people in the crypto market, so Bitcoin traders. But a lot of times when these articles say Bitcoin, they kind of they're referring to the overall crypto market. So in March, it's the first quarter, is the end of the first quarter. So we have a report that comes out in April that talks about the consumer price index and what is our inflation. So if you look at these numbers, they're percentages and they're kind of small percentages, and it's referring to over previous. But the point is that inflation has a direct correlation to the price of Bitcoin. So as inflation increases and more money is printed, the price of Bitcoin increases. The value of Bitcoin increases. Why is that? Because Bitcoin is non-inflationary. There's only 21 million Bitcoin that'll ever be. That's it. No more, no less. And we're as far as the Bitcoin mining goes, we've mined just under 19 million. We're approaching 19 million Bitcoin mined. We're over 18 million. And we just in 2020 we had our halving. So every 4 years, the reward for mining a block of Bitcoin is cut in half. So the people who are running the machines, who process the transactions to mine Bitcoin, their reward for creating a block is X amount of Bitcoin. But every 4 years, that reward gets cut in half, which increases the resources needed. It increases the difficulty of mining Bitcoin, which slows the process of mining Bitcoin. So it'll be many, 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 many years before we see the last Bitcoin mined. Top economists say dollar crash is inevitable. Demand for crypto assets could spike. Well, yes, it very well could. Most likely, I mean, if history is a teacher, cryptocurrency prices will increase because the demand for them will increase, because people will be looking to hedge losses against the devaluation of the dollar. Anybody who is in finance understands that the price of the dollar fluctuates when it's compared to other currencies around the globe. So this is something very, very important to look at and to be aware of, that as more stimulus money comes out, and they're calling this whole process, basically they're calling it helicopter money. They're dropping money down on us, raining money down on us, just throwing it out of the helicopter. Helicopter cash. It's not a sustainable process. It's not a sustainable thing to do. We can't keep doing it forever. Bitcoin price will hit 400 grand when the USD collapses. So this guy, he's Max Kaiser. He's been in the crypto space for quite a while. And he's somebody that is all about Bitcoin. A lot of people will call him a Bitcoin maximalist. He had, several years ago, he was predicting that Bitcoin was going to be 100K. And back then, people were laughing at him. Well, here we are, pushing $65,000 Bitcoin. Our previous all-time high was over 64. So we're very close to hitting a $65,000 Bitcoin. It is very, very likely, based on history, that we will hit 100K. And now he has changed his prediction to 400,000. Now, many believe that this is very conservative. I think that one of the reasons why Max is looked to as a leader in this space is because when he talks about prices, future prices of Bitcoin, and makes these predictions about Bitcoin, he's very conservative. So, when you're very conservative about a prediction, and then the prediction happens because in your mind you were thinking much higher than what you're saying, you're seen as a sage. You're seen as somebody who can look into the crystal ball of finance and call out a price, and then in the future it happens, and everybody can go back and go, oh, this guy, look at this guy, he knows what he's saying. So anyway, he's now calling for a $400,000 Bitcoin. He's not the only one that's calling for a $400,000 Bitcoin. There are major banks that are calling for a $400,000 Bitcoin. And some of them are saying next year. Well, that's okay. I mean, that's possible. when I started looking at Bitcoin and I started seeing predictions of $50,000 within the next 2 years, I was skeptical. I was very skeptical. Yeah, it happened. It definitely happened. I'm no longer skeptical at all. This other guy, Harry Dent, he's calling for a big market crash by the end of June. Another smart guy. And this was, March 10th. This was last month. He thinks that we are going to have a pretty big fall, and I tend to agree with him because when you're looking at market cycles, especially with the stock market, there are some percentages. They call pullbacks. We talk about pullbacks when we're doing our chart analysis, but the market tends to retrace a certain percentage, and they call it healthy. But we have been in the longest bull market ever in history, and it's all been propped up. It's all been propped up by what? It's all been propped up by the quantitative easing. The printing of money that this guy was talking about back in 1995. So it's very likely that we are going to see a huge downturn economically. It's going to affect a lot of things. And I don't know about this year. I wouldn't say I'm smarter than this guy. I'm thinking that definitely by next year, it could happen, maybe sooner. The best thing to do is just be aware that these things do happen, and to prepare yourself. This article here is talking about the different things to watch for. Flashpoints. Using some inflammatory language there that you want to look for this year. And some of the things they're talking about are sky high stocks. So when stock indexes hit record highs, then there is a trend for the market to retrace. If you noticed, Bitcoin, when we hit all-time highs, we have a retrace in the price of Bitcoin. I mean, just look at the last two. We printed a new all-time high, and we had a big retrace. And then we went sideways, and then we went up. We printed a new all-time high, and now we've retraced. By the way, as we're talking here, Bitcoin has broken below. It's broken out of this descending channel. That's interesting. And we're headed down to the bottom of this support range here. And I'm hoping that we bounce off. I mean, we could bounce off the 200 moving average. So this purple line right here, if you look up here, you have moving averages. Okay, so this purple line right here is the 200. So this is the last 200 candles. So we're looking at a 4-hour chart. So every candle is 4 hours. So it's possible that we'll hit this bottom trend line right here, bottom support line, at about let's see, that price is 58,220, and tap the 200 moving average, and then maybe get an RSI bounce. That'd be great. So we have the RSI is starting to curve right here. But anyway, back to our news. So again, stocks, they print a new all-time high, and then they retrace. So soaring housing prices, which we are seeing right now. Looming foreclosure and eviction crisis, which we are in right now. You know, a lot of jurisdictions around the country and now national on the federal level as well, there's a moratorium on evictions and foreclosures. But that can't be done forever. You know, if people are living in rentals, not paying their rent, and then you have the homeowner who is in risk of foreclosure, well, what happens to the renters? And you have the homeowner who loses the home, and then you have these people who are without a home. And this is a very big problem. And then you have commercial real estate as well. Commercial real estate, if that's affected, which there are a lot of businesses because of the last year that have closed down. Depending on the city and state that you live in, you know, here in Utah we weren't affected quite as bad, but there, you know, other states like California and New York that have not fared so well, and those are very large states with large populations. And what happens if those states completely fail? Those people move. They move to states that are doing much better. So, banks facing loan losses, that correlates with this issue here, where you have foreclosures, for bank foreclosures, so you have failed loans. And if you're having a housing crisis and the banks can't sell all these homes, these properties that they have taken in the process of foreclosure, now what? Now we're looking at a too big to fail situation. Now we're looking at the federal government printing more money and giving this money to the banks to bail them out again. U.S. is facing a dollar collapse by the end of 2021 and over a 50% chance of a double dip recession. This economist here, Steve Roach, this article is basically talking about that very thing. You know, what he thinks and why he thinks it. So there are a lot of people who are very, very worried about the economy because people like this guy, he may lose a couple million of his hundreds of millions. But what about the average Joe? What about people who lose the homes that they're living in because they haven't been paying rent for months and months? It's something to be concerned about. Why stagflation is a growing threat to the global economy. And that comes to the overall theme of this video, is that the United States runs the global economy in one way or another. We tend to dictate what the rest of the globe does, all because the US dollar is the world reserve currency. But what happens if the world reserve currency collapses or it doubles in the supply for where we are now? So what happens when your buying power is decreased by 50%? What happens when gas is costing you $3.30, $4 a gallon, and it goes up to $8 in just a few short weeks? What happens to our economy then? The cost of everything increases. Products and services increase in price. Massive inflation. This right here is the money supply over time since 2010 to now. And why 2010? Because this is when Bitcoin was being tracked, October of 2009. This is the value of Bitcoin, or the money supply of Bitcoin, in relation to the money supply of the US dollar. Bitcoin's value is getting close to the US dollar. as far as the money supply. What happens when Bitcoin reaches this point up here? What happens when it surpasses it? What will become the world reserve currency? What will become the main form of money transfer? Bitcoin primarily is a store of value. Right now, it's just not fast enough. The fees are too high in relation to other currencies to become a global payment system. There are other currencies out there that would do a much better job. One of those is XRP. And this is something that the company Ripple has been working on for many years. Another one is Stellar. Stellar Lumens is the token. There's all kinds of currencies that are much faster as a payment system. And I would imagine that many of these are not going to go away. Many of them will be used in some form or fashion. Bitcoin is the store of value. This is where major financial institutions and countries, governments, are putting their money into as a hedge against the US dollar. So, with all that, I'll let you guys enjoy the rest of your weekend and give you some important information to contemplate. The future, your financial future for yourself and your family. And crypto is that future. You guys have a great weekend.